All right. Good morning, everybody. Keep your eye on Japan. The new prime minister, I'm not even going to try to pronounce her name, has already elected a new finance minister, and their approach is going to be that they can spend their way out of debt, and they're going to radically alter the financial landscape that Japan has used for a long time. So, with changes come shenanigans, incidents, accidents, goodness knows what else. So you got the JGB 10-year, US dollar Japan, a lot of different things you can use. Those would be the two. If you don't have that, use an ETF for Japan. Small caps are basically flat with the NASDAQ and the S&P, Dow up just slightly. So we've got nothing from the overnight. Japan's up around 0.5%. So at least the markets are taking it well so far. We'll see what comes out of it, I suppose. It's not the known things that gets the market. It's always the unknown surprise things that get the market. A little bit of government chipping their teeth today. Waller's going to be out there. We got European Central Bank, Christine Lagarde, and this guy here. Other than that, it's going to be a pretty quiet front on the economic side. So keep your eye on gotcha headlines coming out of the White House. Yeah, these levels don't look right. We are still about 90 points above the zero gamma line. We're above the volatility trigger, the put wall, everything. So on the intraday today, we have this level here, 67.37. That's about the only thing that we could hit easily. Otherwise, we got to make a move up into the call wall or move down below that level, get through zero gamma, and on we go. Not a lot to work with on the intraday when it comes to spot gamma levels today. We are above all the major moving averages too, 10, 20, and 3 all stacked up like that. This bigger white line is the 3-week. We're back above that. So this is a surge signal. It's a 310 cross. First price breaks above the moving averages, and then the 3 follows. Price above the 10. It's what I call a surge signal. They're both above the 20. We'll see how it plays out. But it's a good start with the way that they're all spread out nice and neat, like a fork pattern. Still looking at 6,800, and everything that we've looked at in the last week or so has shown that there's still a lot of risk out there. That's not a surprise, but that we don't have key signals of all of this unraveling. And if you look at the way earnings are playing out so far, it doesn't look like we're done yet. They continue to pull earnings forward, and Just keep going and going. $69,000, basically 70,000, very close to yesterday's level. Not much to it. And we really didn't get much of a move through the kill zone. All things considered, this was a pretty boring, quiet night. Since we're flat, we're no closer to one edge than we are to the other. It's very likely that if we don't get a catalyst today, that we just sit here inside of the ADR half. Why not, right? It doesn't really owe us anything. And this is the average daily move. So it makes perfect sense that if we don't get anything that can fire us up and get us moving, that we're just going to sit here. Hitting the lower edge is more likely since we don't need an inside day breakout to get there, but that doesn't really excite, and it wouldn't be bearish if we go down and hit that. It's just a part of the wave function. It's what price does. It's a really good example of that back here. It was just a wave, right? Sure, price went down, but we continued to move higher. That's just the way it goes. So hitting this lower level would not be bearish to me. It would just be a part of the move. And it'd be kind of healthy at this point. After this run that we had here, that wouldn't be that bad. It'd be kind of like a Busby off of this breakout point. So we made it all day yesterday without hitting the daily floor pivot. That's a missed daily pivot, and that's the first one. So far today, we haven't hit the pivot either. And if we can make it all day without hitting it, this will be the second one. Missed daily pivots kind of have a little bit of weight to them. There's a trade strategy that goes with it. Now, I don't trade the strategy, not interested in that, but I do use the strategy for context and analysis, right? So, that's one of the benefits of learning different strategies. Even if you don't want to trade them, you can still use the analysis from that strategy. Then maybe, find something else to trade or do something else with the info. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. We're checking the channel at this point. We haven't managed to get inside of it, but once we do, 67.50 is the target. Get through the floor pivot. And if we get out of the bottom of it, well, then we'll check yesterday's RTH low, then the Globex low, weekly pivot, yesterday's floor pivot. You could take that floor pivot and kind of carry it forward, 66.66. I don't know if it will have any weight to it or not, but I would be interested to see, what happens if we get to yesterday's pivot. It's not like a point of control, right? There, it hasn't had any trading there. So, in theory, it shouldn't have any real weight to it today. Yeah, it is kind of the US playbook, isn't it, to spend our way out of debt? A lot of countries are trying to hop on that bandwagon lately. What could go wrong, really? What could go wrong? If we keep above that floor pivot, R1 6811 cog line, and above that 6842, which is an old cog line. It's not an active cog line anymore. We don't keep track of that one, but every time I see that number, I just can't help but remember the old days when we had a lot of 41s. But it's just an R2. The the typical SNR level would be R1 S1 or R1 S2. If we were on the other side of this, we'd be looking at an S1 to R1 or an S1 to R2, but we're on the top side. So at the bare minimum, if we get a breakout of our own Globex high, a breakout of yesterday's high, R1 is the goal. It's 6811. To get there, you got 6792 COG, 6800 options level, 6811. Level by level, right? Just run it all the way back up. So far this week, we are developing a classic P-shape portfolio pattern. It doesn't hold anything at this point. It's really tiny. It's still early in the week, compared to this real big one we had a couple of weeks ago. This is like a little micro mini me version. Still, everything is clustered up here where we are, as it should be, because that's really where we put in all the work so far. If you're looking for a short, you got to get out of this box to really do anything else. On this time frame, it's not really all that helpful at this point. We needed to fill in more. So probably the 10-day, 30-minute would provide more clarity. 6,700 is just below that 6711 point of control from last week. So those would be the downside targets if we get through 6750, right? Remember, we've been running 50s. So if we get back inside 6750, we're running to 6650. You get underneath that, we're going to 6550, just like we did 2 Fridays ago. Ten-day, 30-minute volume profile and TPO. The point of control moved down as we talked about on Monday. It was very likely going to shift lower. Now it's out of our way. We still have these previous footprints to deal with. 6780 area has a high volume node. It's this collection of stuff from the overnight here. Once we get through that, kind of one little tiny speed bump at 6,800, and then we should be good. But they put in a lot of work up there in that tiny little speed bump. Might take a couple of tries to get through that level. We tried back here and we just weren't able to keep it. Maybe this time will be different, especially if we can approach it with some fuel behind it. Headline, gotcha, something, right? We're going to continue to wipe these candles out on the left with every new candle on the right. So by the end of the week, most of that footprint above us will be gone anyway, because it's really just these candles and this little high volume node right there. So those two. And I'm thinking that the bulk of it is right here. Another day and a half. Well, by Friday, that shouldn't be an issue anymore. We'll see. It's got issues. All right, that VPOC level that we carried forward is finally done. Remember, it was tagged when we were looking at it yesterday, and I said, well, I wanted to leave it on through the day. If you were watching it, when we came up into that level again, it did struggle there briefly, but I mean, it made it through anyways. Still, it was a nice warning. We're done with it now. We don't need it anymore. And today we don't have a VPOC from yesterday because, well, we spent a couple of hours on that point of control, and we're done with it. So don't need to carry that one forward today. We got a double distribution forming this morning. The TPO is showing it a lot clearer than the volume profile, which I guess the volume profile maybe is a lowercase b. Still, we've left it behind underneath us. It was an area well defended. Now that we're back above it, we want to keep it. We do not want to go back down into this lower level. The value area is a lot wider than I would have expected. You know, this should be a much tighter zone, something like this. And the fact that it's not, it's a little interesting. But all in all, there's not really all that that much of a warning here yet. Yesterday's key shape pattern kind of defines this level up here. We've put in a lot of work between these two time frames, so it's going to be difficult to get through this zone. Not saying that we can't do it, just that it's going to be really difficult to get through there. Starting with the value area high, right where we're fighting this 67.77 area. If we can get through this line, this value area high, then we've got all of that trash, that footprint to deal with. I would look to see if we can get some assistance, you know, as say dollar treasuries, commodities, bonds and dollar open just after 8. Maybe that could be the fuel that can get us across. There's 8 o'clock and there's 8:20. So see if either of those two time frames provides enough fuel to push us over that level. Otherwise, that's the line in the sand that we're really fighting against for the shorter time frame, I mean. All right, we talked about this liquidity gap multiple times. Um, a liquidity gap is different than a regular gap, right? It's the idea that you don't see a gap, you see candles. So then, you know, begin to argue what gap? There isn't even a gap there, but it's more of a liquidity gap than anything else. And to catch it, you kind of got to go into the intraday to where it all began. So 67.95, that would be the level that I would focus on rather than the market open at 9:30, because it really all started right there. And now that we've got that, kind of jump back out. That's the gap close. But that's nuanced, and a lot of analysts, they won't leave the daily chart. They'll just stay out here on the daily and do all of their work from there, in which case 67.79 becomes the level of interest. And so far, that's holding true. So I wouldn't get too picky about this. It's about 20 points difference, maybe 15 points. It's not much, but we have to get through this 67.80 level to do anything else. And that's really where we're fighting. It's yesterday's close. It's where this big footprint is on the daily, on the 5-minute, on the 30-minute, on the hourly. We got all this structure right there. So why not just mark that level rather than being, you know, super picky about it and getting that 67.95 level? Well, I'm going to keep my 95 level because it's mine and I want it. But For right now, 67.80 is the concern. Otherwise, we're doing good so far. Nice move up from Friday's low. Really good close. And then into yesterday with another really good close. Nice tails underneath, almost like we had a swing low, right? With these really nice tails underneath. We finally broke something that we've been doing for a few days now, wicking up and failing. No wick at all here. When we got up into that level yesterday, one of the concerns was that we were just going to wick up into it and then fade back out again. Well, we didn't fade back out. We were actually able to hold it. The concern, though, is maybe we didn't wick out because of the close, right? When you run out of time, you run out of time. I don't necessarily subscribe to that argument because we've been sitting up here all night. If it was a time issue, we got back into business. The market's been open for, half the day is gone already, and we're still up there. Still, it's not RTH. We could get back into the regular trading session and come right back down again, leaving yet again another wick up here. And then it would just be the same regime that we've had, where we got this central zone and we're running wicks on each side. Just because this candle closed up here doesn't mean we're done. We have to see how this next candle goes, right? The concern is we're going to leave a wick behind and we're going to close somewhere back down here around that 67 to 66.50 area, that 50-point zone, and that we're going to still be inside of this range. That's the concern. What would be better is we get outside of this Friday bar and expand higher and then, Busby off of it or something and validate it as a new support level, and that we're done with all of this stuff at that point. Just got to see how it plays out. We are above the 10-day, but less than 1%. So we're not overbought. We're not overextended. We didn't move too far, too fast in the last 2 days to cause any sort of mean reversion or least squared method or dot plot statistics or anything else that might hint at a pullback, simply because of how far we moved. Looking at the weekly, we're still holding around that 2.4, so we're more than 2% above the 10-week. It's a good, healthy place to be. There's nothing wrong with that situation. And if it ain't broke, don't fix it. It ain't broke. There's no concern here. We're not overbought on this time frame either. That would be the weekly. Not overbought, not overextended. We haven't moved too far, too fast, and it doesn't owe us any sort of a pullback. It's not a surprise, right? We're still inside the Friday's range from 2 weeks ago. Of course, we haven't gone too far. We haven't gone anywhere. Looking at what's down this morning, gold miners are down. Bitcoin, uranium, metals and mining, China is down. And really, that's the lot of it. Now, looking at what's up this morning, the VIX is up. I mean, it was down more than 12%. So the fact that it's up a little this morning is like a relief bounce more than anything else. Nat gas. And that's it. Our benchmark is 0.5%. So all of these don't count. Now, Thinkorswim doesn't do a fantastic job of looking at things in the pre-market, right? It's not the strong suit. So jump over here and look at it. We got the VIX hanging out around that 18 level. And there's a VIX expiry this week, and that's going to cause a big gap on this thing. It always freaks people out, right? I see it in the chat. Oh, gosh, look, the VIX, it gapped up, it gapped down. Yeah, it was just an options change. Relax. It's all good. So this is the daily. We're back under the 20. we're back under 19, that historic level, getting closer to the 18 level. And it's just an indication that things are fine. I was looking at the dispersion index and the core 1M and core 3M, comparing it against the VIX. You know, the cost of hedges dropped significantly. The VIX is headed back down. Whatever short-term risk that was out there, it was like a speed bump, man. We're past it already. Yep. So outside the VIX, we got nat gas and solar. You don't want a rally day on nat gas and solar, right? That's just not gonna sustain anything. Industrials is nice, but it's not even up enough, right? 0.4, we need 0.5. So we got nothing. Yeah, definitely, right? If you're gonna have all of this, you might as well throw pot stocks in there somewhere, and I don't even see them. Pot stocks ain't high at all. At least there's nothing showing for like the carry trade unwind or anything like that. We're not seeing anything. And this might not be the kind of morning that you think you want, right? Because we don't have the Mag 7, we don't have the chip sectors, we don't have all the bullies and the high flyers. But I like this kind of morning. We haven't run. You know, I hate it when I come in here and we're already up 2% on the day. I wanted to run at 2% on the day, and if it's already up and I slept through it, well, then that sucks. So if nothing has run yet, then we have the capacity to run with it when it finally does make a move, if it makes a move. And the signals that we want, they're not here yet, which is great, because then when they do show up, we've got something to point to and say, look, here's some signals. If we already had a bunch of stuff signaling the long and it had already made the run, well, then we would be looking to see it flip or reverse. I like this. Keep your eye on the Mag 7 and chips, and see what we get out of those. See if we can get a catalyst or a little bit of fuel, some 0-day options flow once the market opens. This is a good setup. Tie it with this tight range that we have, and you got like a GTFO situation. As we have every day this capacity to just draw a box around price, you got to get out of that range, right? To do anything else, you got to get out of this range. Well, that high is basically yesterday's high. Just mark the RTH. That's yesterday's high. Now you can put a mid in there somewhere. $67.58. Then you got the RTH low of yesterday and the full low of yesterday. There's your levels. Yesterday's RTH low looks about like the mid all on its own. Nah, I guess not. It's a little off. And there's the full mid. If we get the breakout, you got the 111 and the 1236 up here. I didn't add that, but you got that up there as well. On both of them, you can mark it from the RTH only and get a 111, 1236, and then you can do the full measure with the 111, 1236. Sounds pretty good to me. So this is a really comfortable setup. All we got to do is look for the 0-day options flows, maybe a little change in dollar yield, bonds, treasuries, JGP 10-year, all that good stuff, and catch some Mag 7, maybe some chips. Do the thing. Everybody, be careful, be safe, have a good day. I'll see y'all tomorrow.